So, my name is Marcin Hejka. I'm managing Intel Capital in emerging markets, including Eastern Europe, Central Eastern Europe, Russia, Turkey, Middle East, Africa, India, and Southeast Asia. And I would like to talk about unicorns. You know, this is the species that, unfortunately does not exist in Poland yet. Why? It's a good question. It is a mystery to me. Pretty much every single neighbor of ours has already a couple of unicorns, almost. Like there are probably around 4 unicorns in Czech Republic, 2 unicorns in Belarus, not in Poland yet. So that's something that we need to improve. Luckily, as an investor, we already have a couple of unicorns in the region. So far, 3 of our portfolio companies in Central Eastern Europe reached and exceeded valuation of $1 billion. Those were Yandex in Russia, AVG in Czech Republic, and LogMeIn in Hungary. But we are still waiting and still hopeful about unicorns emerging in Poland. Oh, works. So, unicorns. You know, it's a species that is incredibly rare, and it used to be like that. So, between 2003 and 2013, so in a decade following the internet bubble burst, globally there were only 39 unicorns. So before 2014, on average, there were 4 unicorns per annum. And suddenly, situation changed in 2014. And since 2014, close to 200 unicorns were created. So basically, instead of 4 unicorns being created in a year, suddenly, since 2014, we have 1 unicorn every 4 days on average. So probably this category of companies, those are unicorns, but they are spreading like bunnies. So probably the name change is something that at some point of time should be considered. Where do unicorns come from? It's not going to be a surprise to anyone, but globally, 60% of unicorns is coming from the United States. And actually, if you take a look at the state of California is producing approximately 50% of global unicorns, which is an amazing result, and to a large extent a function of the ecosystem. United States is the early adopting market, is a large market. So if you take a look at any new market, you can safely assume that probably more than 50%, and in some cases more than 70% of global consumption is taking place in the US. And United States, and specifically Silicon Valley, is also the place where it is incredibly easy to get capital, to get funded. So a combination of availability of infrastructure, talent, funding, and large market is what makes the US by far the largest unicorn market globally. It's followed by China. So roughly a quarter of global unicorns is coming from China. And this is also not surprising. China is building its own ecosystem. The difference is that more unicorns in China is concentrated on satisfying local demand, while in the US, unicorns are to a large extent driven by driving new technologies and driving innovations. Europe is slightly more, is low-teen numbers of unicorns, roughly 12% of global unicorns is coming from Europe, which in my opinion makes Europe underrepresented region in terms of source of unicorns. The reason behind it, one of the reasons behind it that is not fully appreciated in my opinion, is that a lot of companies actually at some point of time, because of attractiveness of US market as the place where customers are and the place where easy funding is available, probably, you know, many European companies actually at a certain point of time is moving to the US and is being included in the US statistics. The rest of the world is clearly running behind, but one thing worth mentioning is that actually, you know, unicorns can come from anywhere. A couple of months ago, actually, we have seen the birth of the first African unicorn. It's the company from Nigeria called Jumia. So there is no continent other than Antarctica that is without unicorns. How can we split unicorns? So what are the kind of most common categories that unicorns belong to? So the group that is most typical to Silicon Valley are pioneers of new industries and disruptors, companies that are disrupting existing businesses. And, you know, as an example, you know, Square disrupted the mobile payment industry. SpaceX is a disruptor in space industry. Nest was disrupting the home automation or home IoT market. Oculus was a disruptor in virtual reality. So basically, ability to disrupt potentially very sizable market is a very good way to become a unicorn. And because of whatever reason, California and United States are leading here. So there are actually not that many companies in that category coming from outside of the United States. There are some coming from Europe. Another way to create unicorns is to copy someone else's model in a sizable market. And you know, in this category we have actually a number of consumer internet and plays and e-commerce plays from large emerging markets. So if you take a look at this category, obviously, you know, this wouldn't fly in a small country, or it wouldn't even fly in a medium-sized country like Poland. So this category is dominated by companies from China, India, and most recently one company from Africa. So those are basically companies that are copying successful models from United States. You know, another category of companies is addressing pretty much the same audience, but it's instead of copying, you know, in a way they are kind of establishing their own models to address specific needs of local audiences. You have some OEMs here, and to a large extent those like Xiaomi, but those are also companies that are to a certain extent copycats, that are kind of tweaking their models to address specific needs of and specific purchasing behaviors of consumers in their home markets, which happen to be mostly also large emerging markets like China or India. You know, one category that also produced a good number of unicorns are unicorns related to sharing economy. And also, once again, because of whatever reason, you know, this new ideas in this space are coming out mostly from the United States, and trying to become global quickly. So, you know, there is actually one French company on the list. The other ones are American companies with Uber and Airbnb quickly becoming becoming global companies. Social platforms also has produced a number of unicorns in the last couple of years. And the number of exits that were in north of $1 billion valuation. And finally, the last category are companies that are addressing the needs of hyper fast growing industries. Related to machine learning, cloud. There are many enterprise plays in this industry, so this is pretty much, the only category of unicorns that is, to a large extent, occupied by companies offering services and products to enterprise customers. Based on the analysis, it's quite interesting to kind of, to scratch the surface and to see what's behind the unicorn. So what the average unicorn is. And the interesting thing is that actually people who establish unicorns, who fund unicorns, are actually not teenagers. Those are already pretty well established and experienced people. The average age of founder of unicorn is 34 years. And depending on the specific sector, it varies. So it's the average age is 30 for audience-based unicorns, growing to 32 years for e-commerce unicorns, 35 years for SaaS unicorns, and 36 for IoT, and 39 years for unicorns operating in the enterprise space. Absolute majority of unicorns is established by more than one person. So only around 14% of unicorns has one founder. In 86% of cases, it's a team. So it kind of shows the importance of having solid partners. Absolute majority of unicorns have founders who have experience, entrepreneurial experience, and track record of building companies previously. Over 90% of unicorns have founders who have technical background. So the quality of technology is absolutely vital and almost an imperative for unicorns. The interesting thing is that despite the kind of, the urban legend, actually only 19% of unicorns have founders who dropped out from college. One interesting piece of data is that approximately 50% of US unicorns actually have at least one founder that is not from US. So, which kind of supports my earlier thesis that, a lot of European companies, just to get closer to their consumers and just to get closer to easy sources of funding, move to the US. The interesting thing is that roughly 3/4 of companies that unicorns at the time of exit are still led by the founder, which is, by the way, pretty amazing result, because managing a startup and managing $1 billion plus company, it is a totally different business. And actually my expectation would be that higher percentage of founders would actually move on to kind of supervisory board position or to becoming just a shareholder and hire a professional CEO. Actually, it seems that the team, even at the time of establishing the business, is already strong enough and mature enough that they are able to grow with the growth of the business and still manage the company at the time of exit. And it's a team effort. So the data shows that actually on average the board of the company has 6.5 members, 6.4 members. It is really difficult to grow to over $1 billion valuation alone. The interesting thing is that actually majority of unicorns is concentrated on B2C segment. Actually, it is surprising that still 45% of unicorns is still present in enterprise business, which is kind of, higher than kind of, the common sense. But those companies are generally less visible because of the nature of their customers. Majority of companies actually still work on the original concept. They don't change strategy, they don't change products between the establishment and exit. One interesting metric is that building a unicorn requires time and requires a lot of money. So it is really difficult to build a unicorn without a significant funding. So on average, US unicorns need to raise almost $300 million from venture investors before becoming a unicorn. So, it's really difficult to build a unicorn without significant funding. But still, on average, unicorns increase their value close to 70 times between the establishing the company and the exit. If we take a look at, at the time and, starting from the number of rounds that it's taking to build a unicorn, actually I can see that in majority of cases, 4 or 5 rounds are required to build a unicorn. So it is a process. So on average, unicorns raise a new round of funding roughly every year and a bit. And it takes, as you can see, around 6 years on average to build a unicorn. So 6 years, multiple financing rounds, a team, and significant volume of funding. And as you can see, majority of unicorns need triple-digit $1 million funding before achieving a status of unicorn. Here you have the data about kind of the frequency of funding. So as I mentioned, the average is around 1 year. So basically, building a unicorn is very costly. So basically, companies need to really burn a lot of money in order to fund their growth, to build their products. And it's pretty frequent, which is kind of logical, yeah? Because bearing in mind the growth of the valuation, it actually, for those companies, it makes sense to have more frequent funding rounds. In terms of capital efficiency, that's another piece of data that may be surprising. Actually, even though the gap between the original valuation and exit valuation for unicorns is close to 70, the capital efficiency ratio, which is the ratio between the capital that those companies need to spend to grow and the exit valuation, is only around 6-7 times. So on average, $1 invested in unicorn generates $6 to $8 at the exit, which is probably below the common perception. So it is difficult to build huge value from nothing. Actually, there is a lot of money that needs to be spent, and kind of 6 to 8 times cash-on-cash return on average. Doesn't seem to be that shocking. It's still incredibly good, and obviously there are some companies that were able to generate 20 times, 15 times, or even 30 times cash on cash, but those are rather exceptions. In terms of exits, The interesting thing is that, and this is actually the challenge, one of the challenges that unicorns are facing. Many of unicorns are valued so richly that it's actually difficult to find an exit. So basically their valuations are so high that it is becoming almost difficult to justify for public investors and difficult to justify for strategic acquirers. So what we see is that actually the number of exits of unicorns has been slowing down recently. It's clearly a challenge for the company. In terms of exits, the interesting thing is that in terms of number of exits, enterprise companies are majority. In terms of volume, actually consumer-related unicorns are majority. So basically, consumer-related unicorns are generally able to get higher valuations. The interesting thing is that even though the number of unicorns historically already exceeded 200, the number of investors who were able to invest in multiple unicorns is not that high. So as you can see, actually, probably if we take a look at venture firms who are able to invest in more than one unicorn, this number is probably around 30, 35. So it seems that unicorns are rare, but investors who are able to spot them and invest into them seem to be even rarer. And finally, I would like to talk briefly about the future of unicorns. So unicorns, the best time for unicorns was 2014 and 2015. So in the period of 2014-15 until pretty much Q3 2015, we saw roughly 20 unicorns per quarter, 20 new unicorns being created per quarter. This number went down sharply in Q4 last year to 12. Already majority of valuations of those unicorns were in the range of 1 billion to 1.1 billion. So those companies actually barely reached the unicorn status. And actually, in many cases, we could see that terms that unicorns had to offer to investors were worse than before. So in terms of liquidation preference, IPO rights. So it seems that many of the companies that became unicorns recently had to give up on other terms to be able to get a billion-dollar valuation. And the new phenomena that we did not really see before is that valuations of unicorns is going down. We have more and more companies, unicorn companies, getting new funding at lower valuation than the previous funding. And the moment of truth for unicorns is coming. It's estimated that approximately 60% of unicorns globally will need new funding in the next 3 quarters, with pretty much 40% of existing unicorns that will have to go to the market and raise new rounds in the second half of 2016. And it will be the moment of truth. We will see whether the unicorn phenomena, whether it's going to go through correction or whether it will continue. And by the end of 2016, we will see. Because the number of unicorns may go down. We may see a correction in the valuation if they are not able to attract funding. And as mentioned, Q4 of 2015 seems to show that this is likely scenario. So we might have seen actually the peak of the unicorn phenomena already in 2014 and 2015. And maybe we will see kind of correction in the space through the rest of the year. So with that, I'm out of time, so I'm going to stop and open the floor for Q&A.
Thank you, Marcin. Any question from the audience here in the front?
So, what was the consequence of the dropping valuations of the unicorns, in your opinion, is going to be for the market? And also, do you have any viewpoint on how it's going to affect the lower tiers of the market, so earlier stages of value?
So the consequence is pretty obvious. Yeah? So the companies will need to, some of those companies at least, will need to revise their growth plans. Probably we will see layoffs. Probably we will see those companies trying to cut their burn, to limit their spending, to be able to stay afloat and keep growing and accept the reality of the market. In terms of kind of the companies, the startups that are still at in the beginning of their road, I do not expect much of the impact. I think that there's still a lot of valuations at early stages, in my opinion, are not going to be impacted that much. I think that good ideas, good products, good technologies are still going to be very much valued by investors, of course. So I would say that seed rounds and rounds A and B are probably going to stay not impacted or impacted minimally. Most of the impact is going to happen at the unicorn level.
There's a question.
Hi, so can you share how frequently do you invest in the region in general, and what stage should be, for example, a Polish company to interest you?
Sure. So we invest roughly in a dozen companies every year. So we started investing in the region back in '99. And since then, we are investing initially in around 4 or 5 companies per annum. In recent years, we were doing roughly 10 investments every year. We are stage agnostic, so we are able to do investments of any size, from seed stage to large companies, even to public companies.
Marcin, I also heard a concern among the audience. People saying, okay, I have a nice running company. It's not a unicorn. Maybe it doesn't have unicorn potential. So what? Not everybody, not every company has unicorn potential. Not every company has to become a unicorn. I would be pragmatic here. I think that targeting a segment that has a kind of size of 100 million, may create little chances to produce a unicorn, but still may be a fantastic business. Maybe it's a business with limited competition. So becoming niche player can also be a very good strategy, where you need much less funding, and even though the exit valuation is lower and has no chance of really reaching unicorn valuation, you can still get much better cash on cash return. Marcin, thank you very much for joining us today. Thank you very much.